Are you buying and selling cryptos on the same laptop that you're using to browse the internet, read your email, and visit social media sites? If so, you're exposing your cryptos to theft. Whenever you're online, you're at risk of getting hacked and having your identity stolen. How would you feel if someone stole all of your cryptos? What would that do to your finances? Guard your cryptos with a safe and secure laptop from CALIX Solutions. Each laptop is set up just for you and your cryptos, and then we walk you through exactly how it works. Don't risk the security of your cryptos. Order a crypto laptop from CALIX Solutions now to secure your crypto future. Learn more at calixsolutions.io.
Good morning and welcome to the Bitcoin Thursdays with Dr. J. Money, the oldest illusion of control, a piece of paper, a promise, a lie that we all agree to believe in. Today we're going to delve into wealth, sovereignty, and of course, digital rebellion. I have with me today David B., who is an analyst, a skeptic, a alternate currency enthusiast, and perhaps someone who sees the cracks in the walls before the cathedral collapses. David is joining us. He's a man who swims in the numbers, behind the numbers. He reads the tea leaves of capital markets. Welcome, David. Welcome to the show.
Thanks, Dr. J. That was pretty good intro. Appreciate it. Good to be here.
Great. David, tell us a little bit about yourself and what you have been doing over the past couple of decades now.
Sure. First of all, I want to put a disclaimer out there saying all these opinions are my own, have no relationship to any company I'm affiliated with, which I do. I am fully employed, but I just want to put that out there. And so I'll give you a little background. As Jay said, I've been in the finance investment business probably over the past 25 years at least. Time flies. I forget the timing. But I started in banking. I was a credit analyst, commercial lender, went on to the investment side, where I was an investment analyst for a long time, then a chief investment officer for a couple smaller investment firms. And, I'm currently an investment officer at a firm, and that's really it. And, time's flown, and it's been a ride.
Well, great to have you here with that wealth of experience and knowledge, and to share with our viewers and listeners. So it's really exciting for us. But David, indulge me. Was there a moment in time, a flash when you sort of looked at the dollar bill in your hand and you said, man, this is less of a king and more of a court jester? For me, I know it was in 2008 when the markets collapsed and the government bailed out all the biggest banks and the little guy was left with nothing, right? And I realized at that moment in time, I was in San Francisco working with a Israeli fintech company, and I realized that the system was not broken. It was actually designed to perform that way. And that realization led me to believe that fiat might be a falsehood. What are your thoughts on give me a time when you actually started saying alternate assets, alternate currencies is an important aspect of what you need to look at?
Well, I'll go back even further than 2008. So again, I've been in this business for a long time. Different areas and everything. I've seen a lot. And I would say the first time I thought there was cracks was probably the early 90s. When I was employed at a bank, and it was during the S&L crisis. And there was falsehoods. I didn't really know what was going on, to be honest. I was too young. and I really didn't understand the ramifications of it all. So that was like the first peg, I would say, in all that. Then the second one was probably 2000, and during Alan Greenspan's time as Fed chairman, he brought rates really low, and that was the first time we tried that. And I guess it kind of worked, because the markets went up, values went up, prices went up, and it was kind of the playbook that they beta test, if you want to call it, toward the 2008, 2006. First of all, it was 2006, 2007, culminated in 2008, right, with the bailouts and the playing with the Fed funds rate, and so it's been a long time that I've seen the cracks, and it's just to the point of where now, and we'll probably get into this about where we are from a fiscal standpoint as a country. So
when I hear that history that you speak of in 2000, the quantitative changes are being made, and it's almost like you can predict the collapse has to come, right? It's designed, it's programmed, just like Bitcoin, folks, is designed to halve every 4 years. It's almost a programming that went in. It's a system made by the powerful for the powerful. It just feels like it's the casino where the house always wins, and the rules are made, after you have put your chips already on the table. So is this a rigged system, David?
Well, if anybody really wants to know monetary history in the U.S., they should read Creature of Jekyll Island, and that was about the history of putting together the Federal Reserve, which was originally put together by the banks, the big banks back then, pretty much led by J.P. Morgan himself. So that was really where things started happening, in terms of the fiat system of creation. So the next piece that probably impacted our country directly was when Richard Nixon took us off the gold standard in 1971, where we no longer needed the gold as the collateral. We just found other people to finance our spending for the wars, Vietnam stuff, Vietnam War and everything. So, and it's just really been snowballing since then. So it goes back to who is in charge of the money.
And that's it. It's a fascinating journey down memory lane at this point from 71 to 2025. I mean, a good half a century has passed. The Federal Reserve is neither federal nor a reserve. And what a illusion that has been pulled over us. Mm-hmm. So as we look at, to the untrained eye, Bitcoin, some of the other coins, some of the other digital currencies are pieces of code. Mm-hmm. And I found it oddly charming that people have found more faith in a Federal Reserve, which is owned privately, which has no transparency whatsoever and can print money at will. And they have trusted that over a framework which is entirely open. There's a program. It's like Ben always says, the email works because it's designed to work. Mm-hmm. You press the send button and it sends the email. In crypto, in Bitcoin, the halving happens every 4 years. There's a scarcity, there's a structure, there's a program, it's transparent, it's right there. Why would you not trust it? Mm-hmm. What are your thoughts on that?
Well, all right, get back to the Federal Reserve for a second. I remember, I've been around long enough to where I remember where we didn't talk about the Federal Reserve in my business. It was just a placemat or placeholder, I would say, to initiate lending rates. The prime rate, which was most where commercial loans were based upon. Mm-hmm. Prime rate was the basis, and then you put a spread on top of that for the banks. But over the past 20 years, I would say, again, going back 20, 25 years, we started hearing about it more and more in the headlines. And I know I might be going off a little bit of what you were talking about, but I want to make this point. I think it's important to where there's a generation of investment advisors and investment professionals who haven't been in the investment world, prior to the Federal Reserve controlling everything. So this is fairly new to the construct of the whole industry. And I'm not saying it's good. I'm not saying it's bad. It's just what it is, right? So from the standpoint of knowing who controls everything, and that this is the issue that we have, is in a free market, there should be no centralized control, right? And that's where Bitcoin comes in, yes. Right? And ownership. So this ownership of the system, of the current system, investment system, dollar system, currency system, is not for us, right? It's not for us individuals, and that's where, the reason Bitcoin was created was for you and I to buy a car from you. I send you Bitcoin and you accept it, right? It's a currency, right? So that was the point, right?
But in some ways, when you say that it wasn't meant for us, if you look at the Constitution and especially as it was being drafted by the at the Continental room with the 5 original drafters of it with Jefferson, the idea was life, liberty, and the right to property. That was the original phrasing, which was later turned into the pursuit of happiness, which is far more generic. But the original phrase that was used in the draft was life, liberty, and the right to property, which essentially is what Bitcoin is about. It's really about sovereignty. So historically, these are God-given rights that we should certainly have. And yet, in the modern rendition, it almost seems like this was only written for the rich and powerful to have life, liberty, and the right to property, and not anyone else.
Yeah, no, it's the dollar is an IOU, right? So, and as you mentioned before, there is a Federal Reserve. It's not federal, and there's no reserve, right? So the point of paper currency and the dollar that we have in our wallet is only as good as the trust in the system is, right? So far, it's a trusted system. 70% or something like that of transactions in the world are done in dollars still. That who knows when that's going to change. There's a lot of military behind that dollar, right? So it's kind of who wants to pull the thread first, right? So I mean, there's things going on in the world, as we all know, with the BRICS, with Bitcoin,
the petrodollars,
the petrodollar. We can talk about the petrodollar. The petrodollar is changing, right? And I think that was part of the impetus, part of the not to get into the politics of it, because I'm not a politician. I'm political atheist, I would say, or agnostic.
A political atheist. I like that phrase. That phrase.
I've been around too long to understand that anybody's really looking out for us. But in terms of the petrodollar, that's a good point. To where that is probably mostly why the dollar's been king dollar, right?
Yes.
The reserve currency. Because if nobody knows what the petrodollar is, and I can explain that quickly.
Please do.
Is that, so if you're buying a gallon of, let's say, barrel of oil in Japan, and you want to go to the market to do that, you have to convert your yen to the US dollar before you buy that barrel. That basically makes demand for the dollar because of that transaction. Is there value in that transaction to the end user, the Japanese? Probably not. It's just a currency transaction.
Yes.
It's not a value transaction. So that's, with this shift, and if it continues, I don't know where things stand, from a energy standpoint. You probably know much more than I do on that. But if things move toward the greener, let's say, landscape for that, that's going to put pressure on the petrodollar's use too, right? And the demand for dollars is going to go down even further. So yes, I mean, part of, we'll eventually get to the Bitcoin side, but that's a little more history of where the dollar's been and where it is now, right? And there is cracks I'm seeing.
Indeed. And let's get to that Bitcoin side. I have personally in this brief life chased emeralds in Colombia, to lithium in Chile, to all kinds of exotic rare earths, and to look for value. But how should the average person protect their wealth? Tell me about the alternate currencies that are viable alternatives today that you are looking at. You have been an analyst, you're an advisor. What are some of the different classes of assets that you like? Tell us about it.
As an advisor, we're all about diversification, right? So what I mean by that is having exposure to, in a financial advisory framework, you really look at, a couple tenets of that. Having exposure to domestic equities, U.S. equity market, international equity market, as we've seen, over the past couple months, that a weakening dollar against the other currencies. If you've been watching that, the DXY, the dollar index, has been weakening against other currencies, meaning other currencies, the yen, the euro, have been, let's just say just focus on those two, have been strengthening against the dollar in the exchange markets. And that's reflected in the dollar, US dollar, or the dollar index, the DXY. That's what it's called. Basically, it's a dollar against a basket of other
alternate currencies.
Developed country currencies. Mm-hmm. Yeah. So essentially, what's been happening there is the dollar's been weakening a little bit, and so the international markets have been coming back up, and people are saying, is this a resurgence of the international markets? I don't know, because this is what's going on in Europe. Is the European Central Bank is lowering interest rates, so that's good for the rich, right? Mostly. And prices, not really valuations of companies. So that's propped up their stock markets. But also what's going on there is, geopolitically, the Ukraine situation, Europe is seeming like they want to step up.
They're doing the CBDC thing too, which is a counter to what you're doing in America. So talk a little bit about what that could have an impact on that basket. And
sure. Yeah. That's, I think it's still in the infancy. Christine Lagarde talked about,
man, she's evil.
She's been convicted. She's a criminal.
She's a criminal.
And she's running the European Central Bank. So, but
somehow this unelected leader is driving what Europe's economy should be doing.
Right.
It's absurd.
Well, it's people behind her, right, that are leading things. So I don't think she's making the decisions on her own. And, that's my own opinion. But yes, she's come out, in October. They're looking to, launch the CBDC in Europe. I don't know if they're ready. I don't know if it's just a posturing. I have no idea. I don't know what it means.
The only advice I can give our viewers is that, folks, if you get a CBDC card, run. Don't walk. Better still, I got a better idea. Burn it, put the ashes into an unmarked envelope and mail it to Christine Lagarde. All right. That's what you should be doing for it. We're going to take a quick break for a commercial, for our word from our sponsors. We'll be right back.
Ever felt left out of the crypto craze? Not anymore. Welcome to Bitcoin Ben Crypto Club, where community meets opportunity. Our clubs are popping up nationwide, from Sarasota to Nashville, Boston to St. Louis. Join us and unlock a world of benefits. Access all clubs worldwide, earn through referrals, and dive into specialized crypto education. Need help buying crypto? We've got you covered, often with reduced fees. But wait, there's more. Enjoy perks like Bitcoin ATMs, silver purchases, and exclusive investment opportunities. Our state-of-the-art facilities offer podcast rooms, event spaces, and co-working areas. Stay informed with FGTV, our exclusive crypto news and education channel. Choose your membership, from day passes to individual or company plans. Individual members get access for themselves plus 2 guests, perfect for bringing friends or family. Companies can bring up to 15 employees or guests, fostering team growth and networking. Connect, learn, and grow with like-minded crypto enthusiasts. Ready to join the revolution? Visit BitcoinBenCryptoClub.com or call 562-526-0813 today. Bitcoin Ben Crypto Club, your gateway to crypto success.
The devil takes many forms. One of them is CBDC, but don't be fooled by it. It will morph and shift and change into other forms like stablecoins. And what other future iterations of it? They're going to try to force down the idea of control, a centralized control, a currency which has an off switch, a currency which has an option, timeout, and a currency that can be controlled as to what you can buy and what you cannot buy. The money's not really yours, folks. David, what do you think about the rise of stable coins as a Trojan horse rather than a savior, rather than a boat that gets you to the other shore? Is it a Trojan horse?
All right, so this is my take on stable coins. So if you look under the hood of stable coins, you could look at the collateral of the stable coins, right? So all the stable coins, the major ones, let's just say the USDC and Tether, under the hood, they are collateralized by U.S. Treasuries, essentially, right? So stepping back a second, we've instituted all this debt structure in the country, fiscally, 34 trillion, something like that.
Something like that.
Yep. Around there. I lost count. But that money or that debt has to be put somewhere, right? So the creation of the stable coins and that collateral base has created another place for treasuries. So with the amount of treasuries that we're issuing, and we have a lot coming due over the next few years in terms of maturity, we're gonna have to find places to put these treasuries. We got to find buyers, right, to keep our fiscal situation less worse than it is. So that is, I think, as you're saying, could be a Trojan horse in saying, all right, we're not doing CBDCs, but we might do a stable coin. It's really just another path to controlling of that treasury market and a supply-demand, let's just say, trying to get an equilibrium on that. And that's all shown in interest rates, right? So, for the bond market, if the price of a bond goes down, if people don't want that bond, price is going to go down, the yield is going to go up. Okay, so it's an inverse relationship, price and yield in bonds. So what we've been dealing with since 2008, right? Let's just focus on that. Is we've instituted a lot of debt, a lot of money into the system, a lot of money into the world system, the U.S. dollars I'm talking about, And other countries are doing it too. And we're not alone in this.
No, it's a
and right
casino.
Yeah, and it's putting money from your right pocket to your left pocket a lot of times. So countries are going to have to find places to put their debt. I think part of the structure that's being talked about in this country is a stable coin versus a CBDC. It's just a different name for it. Right. Yeah. So yeah, we like that word. But so that's the point, is don't be lulled into thinking that stable coins are going to save the system. It's just another peg of the system that they want to save, because if they don't save it, then they have, then they lose control, as you said. So, and that's what it's all about, as you mentioned, the needing that control, and they're either going to do it through CBDCs or potentially, this, or my opinion, stable coins. That could be the next leg of that.
Pay heed to what David is saying here, because like we said, he's seen the cracks in the cathedral walls long before it collapses. So, this is kind of important to know. And that parlays right into the idea of Bitcoin. So, David, if I gave you a suitcase with a gold brick in it, and I gave you another suitcase with the keys to a Bitcoin wallet, and you can only carry one of those two suitcases to that helicopter waiting for you, which one would you pick and why?
Well, from a convenience standpoint, I would pick Bitcoin, right? So I just put it in my pocket. Take it out of the briefcase, put it in my pocket, right? I actually think they're both valuable assets, and I think they can work together. In terms of introduction of a stable coin, why don't we back it? I've been thinking about this. Why don't we back it with gold or with Bitcoin versus US dollars or treasuries? If we're moving on from the current system, that's the next answer, right? To get away from the treasury or the dollars. So, but they don't want to let that happen. Right?
So that's really, that's great. I think the answer is have both. The answer is diversification. The answer is both dollar and both gold and Bitcoin are valuable assets that are perhaps significantly greater longevity than our dollar, our beloved green seductress, which is slowly fading into irrelevance, or perhaps not so slowly. Perhaps it has an operatic end with a dramatic finish. How do you see the phasing out? In life, everything moves on. And we are starting to see those cracks. We're starting to see those shutters at this point. How do you think this ends for the dollar?
Well, go through history. Every fiat currency goes away, fades away, right? But if you look at, the pound, it used to be King Pound. That's gone away. Now it's King Dollar, and we're actually much longer than the average reserve currency that's been used in the world for transactions and everything. So, do I think it's going to go away in my lifetime? Yes. But do I think it's going to go away pretty quickly? Probably not. Because I think that transition is going to create a lot of issues. It's going to be messy. So,
well, it always is, isn't it? It's just it feels like
Yep.
A mistress who realizes that her lover has taken another, and it's only a matter of time, and it's sad, and it's unfortunate, but it's necessary. Humans, we all have a very meaningful capacity for error. And what kind of financial mistakes do you see your clients, people you talk to, committing with perhaps religious devotion over time?
Well, I'll go into a little bit about our business with Bitcoin specifically. Okay. So most of the advisory world is not there yet in terms of Bitcoin, understanding it, wanting to understand it, wanting to have exposure to it. Is that going to change? Probably. But I don't know what it's going to take. I think it's going to be, because think about our own journeys, right, with Bitcoin, right? I've been studying it probably since 2017. Still don't really understand it. I have some. I believe in that it's an alternative currency. Right?
Michael Saylor says you could read it all your life and still not fully understand it.
And I'm not a programmer. I'm not a coder, anything like that. I've never looked at the code. I don't think I ever want to. I've read the Bitcoin paper. It's still very difficult for me to understand it. But I understand the premise. Okay. And the premise was to get us to be an intermediary, to get the intermediaries out of it, out of our business, right? Out of our financial transactionary business. The issue I see, and this is probably, not what a Bitcoiner wants to really hear, is that I think it might have been compromised a little bit with this institutional adoption through the ETFs and the financialization of Bitcoin. It's a small market, right? So what I'm concerned about as a Bitcoiner is that, sure, there are whales that own it, right? But the whales who own it are corporations for the most part, the bigger ones, I'm saying, MicroStrategy is one of them.
Tesla's bought a bunch of it. And
GameStop is going to buy some.
Yep,
I mean, not that,
And the governments.
Governments,
both reserve this strategic Bitcoin reserve. States, Texas, Florida, they're all...
See, I'm going to be against the grain on this too, is I don't think the federal government should own Bitcoin. I think the state governments should, because the federal government, even though they said they're not going to print money to do this, they can. The state governments have their own assets that they created through, or their own reserves, let's just say, through collection of taxes or whatever, and such. So they're moving fiat to Bitcoin, where our federal government, sure, keep the ones we have. I'm all for it. Don't sell anything. Hold on to that. But in terms of adding more, it's got to come from somewhere.
Well, let me give a counter to that, because I've been looking deep into that section, and I do think that there is a way to get a meaningful, because first you got to set a target. I think if the U.S. controlled maybe somewhere between 5 and 20% of the Bitcoin network, the capital B, that would be meaningful and beneficial to the monetary system. And to do that, you don't really need to print new money. And the reason is the following. If you look at the gold certificates that the country currently holds, those certificates are valued at $42.22 per ounce. Now, we know that gold is right now at $3,000 an ounce. So if they were to simply revalue that gold that they currently have from the $42 to even $2,500 or $2,800 an ounce, that's probably close to $1 trillion or more right there that they can essentially put on their balance sheet and purchase the Bitcoin. So I'm not convinced that to get that meaningful chunk, it's not forever, it's not all of it, but to get a meaningful chunk of north of 5% and south of 20%, I think there are ways currently within the government spending structure, which is enormously wasteful, by the way. And there are all these buildings that are being shut down. Auction them off, sell off these buildings, use that money in a reserve, in a value holding tank called Bitcoin. So I just wanted to give a counter that I do feel like that can be done without inflationary pressures.
I'm not saying that's my own opinion, Jay, in terms of, I just don't want the governments to own it. It's not for them. It's for us. That's my feeling. It was created for us. So
a true pioneer.
Well, that's the reason I got into it in the first place. I wanted to understand it. That's the reason, is to be outside of the system. They're bringing it inside the system. And that's great. I agree with you, but I did read.
It's fear and greed, right?
Well, yeah.
The greed is that they will buy and the price will go up and maybe we can sell. The fear is that if they buy it up, they control us.
Right. Well, they control it.
They control it and therefore us.
Yeah. So I did, to talk about your gold revaluation, and I'm not saying this is gospel or anything, but I did hear Scott Bessent on a podcast the other day, and he said they're not going to do that. They're not going to revalue the gold. And he didn't give a reason. He just said he's not going to do it. So, but does that mean that they're not going to do it? No. He's a part of the political landscape, right? Always change their minds and, do something else, right? So, yeah, it's more or less not any specific government owning it or whatever. I just still feel it's for the people. That's all. And when you put it in the hands of the politicians, the government, who's to say that they're not going to co-opt it, do something with it themselves?
Just hodl it.
Right. Well, I mean, that can change, right?
That can.
So with any administration, I don't know how they codify that. So there's a lot of what ifs, but I like the thought of reserve being in Bitcoin
at the state level.
Yeah, I just don't know who should have that reserve. That's what I'm struggling with.
That's a very fair point. I think, and I do want to think more about it, because we need to, as an organization, as a group, start to exert policy making thoughts in the local governments, at the state level and the federal level. But I do think David is right. If you look at the constitutional rights of the states, which, by the way, many of the governors are not even aware of their own constitutional rights, I think having the sovereignty of Bitcoin within the state reserves perhaps is a better tiered structure than at the federal level. So you might have me change my mind on that, but that's why we have these dialogues, these conversations. Okay.
Well, I'm still learning too, Jay.
Yeah, so, we are all exploring this as we go along, which is why these are amazing conversations to have. Just to switch to a lighter side, I am a sucker for good stories, and I am sure that in your 25 years, you have had some amazingly absurd and perhaps interesting investments that have come to your table. People who brought you and asked you to buy art of monkeys on NFTs. Tell us a story that you remember as an interesting one with an asset.
Well, I'll talk about recent history. Okay, so I get emails, right? We all get emails, right? So of solicitors for investments. And I would say like every day I get at least one solicitation to invest in some private venture. Mm-hmm. And clients I work with are not there. They're still trying to, do a cash flow budget, right? So it's like, it's just not feasible for them to invest in something like that. But so this is the way the investment industry works, in my opinion. So every generation, there's always a shiny new toy, that's presented to advisors, and it's presented with like a shining light around it, saying what can go wrong, right? Nothing can go wrong. When in this business, everything can go wrong. We know this. And, who's been around long enough has known it multiple times, So I've been through, different cycles of all these trepidations and everything that we've had in the markets and such. So And the thing that is interesting is the new crop of advisors that are coming on, and nothing against them. We all have to learn, all have a learning curve on this, is that they're being presented with investments that we saw like 20 years ago because it's a generational switch. All right. So I'll give you an example. So separately managed accounts are basically, you give, me some of your wealth. I put it in an investment portfolio that's very unique to you. All right. If you don't want, tobacco in there, take tobacco out, stuff like that. So that was like something we did 20 plus years ago pretty regularly in terms of managing money. There was a point in time back then that everybody wanted to get rid of that. Okay. Because then we went to ETFs. ETFs were basically the solution for that customization because it was costly to advisors, institutions, operationally and such. So ETFs, because ETFs are exchange traded funds, if anybody doesn't know that, are just a morphosis of mutual funds where they're traded like instantaneously as opposed to mutual funds, which are traded at the end of the day. And they're priced instantaneously. So based upon what the underlying assets in that bucket is. So, but there's so many ETF iterations now. Like you can have an ETF.
Derivatives of derivatives.
Yeah, you could have an ETF without, let's just say ex-China, for example. So there's so many slicing and dicing that's been done to replace those, separately managed accounts that I was talking about. But now the new impetus for the industry is going back to separately managed accounts because it's a new crop of advisors that they can tell these stories to that say, all right, your clients need this. But it's just, I don't want to say the absurdity of our business, but some of it is absurd, to see what's, solicited, peddled. I don't know what the right word is, but to the discernment of all this takes experience. That was coming
folks,
full circle. To
folks, I must say that these advisors, it's a dark place. But hey, if you're in a pinch, a good hedge fund manager will do. If you're in a pinch. Now, I was, of course, myself more biased towards investment stories about yachts and Eastern European gangsters and the like. But
I don't have any of those.
Art being stolen from islands. But
I like those.
Those are good ones, right?
Yeah, I just don't have any of those. Or my memory just has pushed them down.
He's more of a banker than a Balkan warlord, I guess.
Pretty much.
I do like the latter better.
Yeah.
That's just what it is.
I do too, but it's not me. I mean, yeah.
So tell me, what is your macro view on token? We talked a little about the decentralized governance structure, and that's kind of really important. Give me a macro thesis on tokenization and what you're seeing in the world. Privacy coins. I mean, these are, factors that are going to come up.
Yeah.
People like yourself will have to convince your clients to either go into those or not go into those.
I would say tokenization is going to be coming, right? We all postulate that it's coming. Real estate is probably the first iteration of that. I think that's happening. In Florida here, I know there's some firms that were trying to do that. I haven't followed them much, but since then, but I've seen a couple presentations on that. So yeah, tokenization, more or less on the blockchain, right? On some blockchain makes sense, but the problem is it gets rid of the intermediaries. It lessens their role. And do they want that to happen? Probably not, unless they're going to control that blockchain. So this is, and I'm saying I don't know if that's going to happen, but the intermediaries I'm talking about are the banks. The banks control basically the system. So are they going to go away easily on this, just like in Bitcoin being infiltrated into the system? Probably not. So this is going to be messy movement.
There's going to be a tenuous battle between the holders and of freedom and the holders of control, and that is expected to be an ongoing battle. And we here, of course, at the Bitcoin Ben Crypto Club, not only know this chaos of anyone who has lived through from 2017 onwards. You have seen Bitcoin rise, you have seen it go down, you've held it. We are used to this chaos. In fact, we thrive in this chaos. But this battle is a very real battle that is coming up, and whether the banks will get to control your money or whether you truly are a sovereign human being who can control their own money, the value, their labor that gets distilled into that coin that sits up in the cloud, right? Which I can access anytime I want and no one else can. So very powerful concept. So we're going to do a quick lightning round. And so you have to tell me whether we buy, we sell, or we hodl. Okay. Of course, we know BTC and gold. You already mentioned that we should certainly keep both of those.
Yep.
And I'll say short term in the sense of 6 to 12 months. That's the time horizon most of our, members are looking at right now. There's a phase of transition. Next 12 months is the time frame. Dollar, what do you do?
I think you still hold it.
Okay. Ethereum.
I have some. I'm going to hold it.
Okay.
But I don't really see the long-term benefit
So
of that.
BTC is a buy, Ether is a hold. AI stocks. Everybody's talking about AI. What's going on there?
Yeah, I mean, that's such a complicated area so far, Jay. And you really don't know what you're getting from, and I know I'm not, you're giving me a lightning round. Sorry. I have to think about this. But I would say fade specifically because you don't know the winners yet. You don't know who's going to stand at the end. We don't of the whole landscape of it. And I'm thinking you're talking about companies, right?
Yes.
That are involved.
Yes.
Let's just say if you're involved in the stock market at all in an index fund, you're going to own it. You're going to own the AI.
Good. You're going to get some exposure through that.
Yeah.
Altcoins.
Yeah. I'm a very novice on this. So I would say, if you're a believer in it, hold. How's that?
Okay.
I just don't know enough.
That's good.
About
what about firearms?
I think everybody should be skilled in
definitely firearms. A hold.
Yeah.
Buy and hold.
It is a currency too.
It is.
It's going back to alternative currency.
What about canned tuna?
Yeah.
I mean, definitely. You got to stack it up. You never know when that bourbon.
Yeah.
You got to hold that because that EMP blast might be coming any day, right?
You never know what people will need for. Currency is what you trust, right? What you need. So yeah, all these are open. I think.
Well, that was brilliant. We love that. Money, folks. It's really about influence, about freedom, about control, and in the right hands, it's really about power. David certainly does not worship at the altar of fiat, and we love that. We love these different perspectives that he's bringing to our members. Thank you, David, for your candid thoughts, your experience, and your brilliance. I just really enjoyed speaking with you, and I heard the devil always offers compound interest. So if anybody's offering you those compound interests, be wary of it. Be wary of the ETFs and the derivative products. We like to be purists. We certainly want our customers to hold Bitcoin, purely Bitcoin, directly Bitcoin, not the paper version of it. That is what, Ben always recommends. And we have a number of great programs for all of our members here. We have a bulk Bitcoin purchase program for our members where we buy bulk Bitcoin and a no KYC Bitcoin for our private members. We have a loan program for those of you who would like to long Bitcoin, short the dollar, short fiat. We have programs through which you can loan money if you have good credit. We have syndicated financial partners who would loan you the money, and essentially you're doing an ARB where you're borrowing money at, let's say, 10 to 15% or less, depending on your credit, and you're expecting a Bitcoin appreciation, a risk-adjusted return on capital of, say, 60% year over year, arbitraging that 45%. And some of these loans are 0% interest loans. Some of them are term loans over 3 to 5 years, so your monthly payments are low. So certainly give us a call if you are interested in either buying bulk Bitcoin or in getting one of the loans with which you can then buy Bitcoin. But we certainly recommend you provide an exposure to your portfolio with alternate currencies, potentially with gold, with Bitcoin, and have a tremendous, strong financial future. God bless you, and God bless America.
Introducing the Liberty Laptop, your gateway to online anonymity. Engineered with your privacy in mind, the Liberty Laptop comes equipped with cutting-edge security features, ensuring that your data remains yours and yours alone. No more worries about your personal information being shared without consent. Say goodbye to prying eyes and third-party snoops. Enjoy your online freedom with advanced privacy settings, protecting your every digital move, all at your fingertips. With the Liberty Laptop, you control what others see and don't see. We customize your privacy settings and let only what matters most to you be shared. No more concerns about unwarranted surveillance. We put the power back in your hands. No unwanted access through the laptop's camera and microphone. Powered by the latest technology, the Liberty Laptop ensures performance while respecting your personal boundaries. The Liberty Laptop. Your control. Your privacy. Your world. Visit calixsolutions.io to experience true personal freedom today.